Okay, Ritu Arora, Chief Investment Officer with Canara HSBC OBC Life Insurance joins us. Ritu, good afternoon to you and thank you for joining us. Let's first start with the big story, and the big story has to be credit policy. On expected lines, the Reserve Bank of India has not changed the repo rate, but some would argue that the accompanying commentary this time around was extremely dovish.
Sir, hello.
Thank you for having me on the show. I would agree that there's no surprise in the Reserve Bank policy, but I would think it is consistent more than dovish, consistent in the message that is being given. And I think over the next couple of months, we should see inflation stabilizing and should be a good stage for Reserve Bank to cut some rates.
So if Reserve Bank of India is of the view that they would, reverse their rate stance once the economic activity picks up and inflation is under control, what does that mean for the banking sector per se?
I think a pickup in the economy augurs very well for the banking sector. We all acknowledge banking sector is a reflection of the economy, and the expectations around economy are turning positive. The fundamentals still remain stressed, but it would be all right to say that we have probably seen the bottom of the cycle and things should improve from here, which will impact banks positively on margins, on NPAs, on restructured loan books, and eventually also with RBI cutting rates. I think that will be icing on the cake, which should then set stage for next couple of years of very strong growth and momentum in banking stocks.
Ritu, so what's the view right now in metals? They quite clearly seem to be finding favor, considering there have been some clearances for a couple of stalled mine projects as well.
The new government is making announcements, is showing some action, and I see a lot of sectoral movements which are aligned with that. And metals clearly is the one which has seen a recent announcement, some benefits to Tata Steel, as you mentioned, and a momentum in the stocks there. But I don't think that there's a very big upside left specifically in the sector at this point in time. And at some point, the market will take a breath in the sector as well.
The stock prices and hopes, they always run ahead of the real economic activity. As of now, it's hope which has taken stock prices up. How soon do you think the real economy will be able to bounce back? Because currently markets are only moving up on assumption. There is no solid evidence that the worst is behind us. Q4 numbers were not that inspiring. The Indian GDP is still below 5%. The headline inflation is sticky. So based on the existing anecdotal data, looks like the worst is clearly not behind us.
I agree with you. Markets are, I think, there'll be two strong forces in the market. One is the expectations, which are very buoyant, and other is the fundamental realities, which are still stressed. So I think that will be the tug which will pull the market in opposite directions. Having said that, at this point in time, hope and expectation of a recovery are much stronger and provide a positive bias to the market. And I don't see a very sharp correction just basis fundamentals, because those are acknowledged. Having said that, I don't think any government has a magic wand, and it's going to take at least a year before we start seeing the fundamentals, the important fundamentals like growth, showing any kind of an improvement and recovery. Any good policy actions also will have their own gestation period before they translate into investments, before they translate into a return of growth. So we need to give the economic cycle at least a year to recover, and more realistically about 2 years before we see a definitive change in the numbers. Having said that, I think markets will obviously run ahead of fundamentals, and at this point in time we are still trading about 16, a little over 16 times FY15, and hence there is headroom for market to move up, but I think with caution, not a runaway rally expected.
Ritu, what's the sense that you're getting about the currency? Because going by the RBI commentary post the policy, it seems that they're extremely bullish on the prospects of the currency stabilizing.
The last couple of months have been positive for the currency, and also the CAD as well as the reserve position of the country has improved substantially, and that does give added confidence, and I would like to believe that currency should not be a fear in the next couple of months.
75 74.15 for the Nifty. Ritu, what is your take on absolute valuations? If I look at the current P for the Sensex, and I'm not looking at FY15, I'm looking at FY16. Let's give this markets a benefit of doubt. Based on FY16 estimates, the Sensex is now trading at something like 13-14 times, which means we are trading above our historical averages. Is there scope for P expansion? Or do you think the scope for P expansion is highly unlikely, and the next leg of the appreciation for markets will only kick in once markets are confident that economic recovery or earning pace has recovered?
I do not anticipate a big runaway rally in the headline indexes, be it Nifty or Sensex to say. So I do not expect the large cap to give a huge outperformance from here. Another 5% and I think things start getting capped. But I do expect sharp movements between sectors, within sectors and stocks, and in the broader market, mid caps and small caps, which still have a lot of steam left in them. So while the broader market might show momentum, I don't think the indices will rally, and I think the first test for the government will be the budget, which is expected in middle of July, as to what direction is set for the fiscal and what kind of concrete policy action. That's the first official concrete policy action that we will see, and I think the markets will make a big judgment at that time. Till such time, we will see sectoral movements like we are seeing in metals today and stock movements, but not a big upside. Also, the downside I think is capped. There would be some disappointments, some things that the market may not like in terms of policy actions, but again, I do not see a big correction, not more than 5 to 10%. So I think market to that extent is a little range bound with sharp sectoral movements.
Okay, Ritu, good chatting with you. Really appreciate you taking the time out and speaking with us. That's the view from Ritu Ji Arora. 7,400 here for the Nifty right now. And you're seeing really a great move come in on the metals bag. They quite clearly are the star performer.